Okay, welcome back to the channel. So I'm going to go back and forth. This is an unedited video, so I might say stupid things, but basically I'll tell you how you may get a 5x in the next 5 years investing in a stock that supplies materials for the electric vehicle revolution. So in my opinion, the electric vehicle revolution, we will eventually get there. Like, things that'll accelerate it is Tesla bringing out cheaper cars, everyone improving the battery tech, just like miners getting more efficient in the process. We'll just get more efficient, and then we'll definitely reach, there's probably already a tipping point now to go to electric vehicles, but there'll be a point where it'll just be way better to get an electric vehicle. If that's just my opinion, you might share a different opinion. Obviously not if you want to like tow a caravan for many kilometers, but once there's all these electrical charging stations, then it'll make more sense. Hopefully get the point. Slowly over time, I'm going to build these things and go electric. That's my opinion. So anyway, first things first, why do I think natural graphite's next? Well, looking at lithium, these companies here, they get this hard rock lithium out of the ground, which eventually goes into the battery. After you get 8 tons of this hard rock spodumene out of the ground, you make 1 ton of lithium hydroxide is the stuff that goes into the battery. So back in this day, they could get out of the ground for $500, sell it for maybe $800, and they were like saying, well, that's going to be good. Now they can get out of the ground for $500, sell it for $5,000, and that's why these prices are going like this. This company here is going to make $5 billion probably next year, or maybe the lithium price drops back a bit and make $3 billion. That's why they're worth $13 billion. And guess what? With that money, they can go downstream. They got free money to spend now, so they're either going to give back through dividends or reinvest it to make more money. And that's why Fortescue Metals is probably a $60 billion company now, because they'll make a lot of money, streamline the process. Anyway, you get the point. So next point, so lithium went in shortfall, prices went crazy. If you invested before the shortfall happened, you probably did well. Next point is CAPEX. So this company, to do 200,000 tons of lithium spodumene, which could make them $800 million this year, they only spent $100 million to build the mine. Because 20 kilometers, look at that. Real close to Darwin, real close to existing infrastructure. So this is GL1 just bring out their presentation. They're going to spend $400 million to this similar amount of tons. So look at that, 40 kilometers, ages away from there. Might have to build a power line out there, not sure. They've got railroad, but then they have to train all the way here. So 4 times the price to build out of the middle of nowhere that is to build close. So when you're looking to invest in a company, you probably want something that's going in production first of all, otherwise it's even more risky. But you want something near existing things. Then you don't have to spend so much money diluting your share price. So basically what happens, oh, you need 400 million to buy it. Well, we're going to give the 400 million. We want half your project. So we're going to give you this much for half. Shut your mouth. You'll do what you're told. And then basically CXO, they raise $100 million pretty easily. And they're going to make that back probably in less. I'm not sure how they're going, but judging by Pilbara Minerals figures, he's going to make $5 billion this year, or make $3 billion, making crazy money. They're going to make a lot of money. So that's lithium. So buy it low, sell high. Lithium still go well, but I'd say invest in graphite, and the graphite price goes like lithium did. It might not go like lithium because there's more graphite in the ground in bigger grades. But there's more graphite needed in the battery also. So I'm not sure how graphite's going to go. They expect shortfall to happen about 2025, and then we'll see. Did it go up, or did it just go up a little bit, or not sure. But I've got money saying that it will go up. And this company will have low CAPEX. How do I know? This company, 140, this is RNU. They're going to basically get graphite out of the ground, make it in the balls, and send it to China or whatever. Have to spend 142 million. And then an EBITDA. And they're going to make $110 million EBITDA. So then after all costs, it'll probably be end up like 50 million. But then say there's a graphite shortfall, this price could double, meaning the payback period becomes way less. You get the point. If we go on a shortfall in graphite, that could happen. So that they're a $600 million company. So I've bought into this company here, ITM, only $38 million. Take in mind, I bought into GL1 when they were $40 million as well. I thought they'd probably get into production, although it was sort of luck because I thought this other mine would get into production they had, and they bought this other mine, which is the one they're taking in production. But yeah, saw what might happen, put money in there, and did well. So ITM could be next, or could just lose all my money, not sure. So 38 million, it got 8 million cash, and I didn't even see this announcement. They started drilling this project. So basically, this is RNU. They've spent 140 million, and then they can make $100 million a year EBITDA before the graphite shortfall could happen, meaning it could be more. So that's them, $600 million company. This company here, 35 million. This one is already $10 million. It can go on the battery. They proved it. This one's still got to do more proving to make sure again the battery, which I'm guessing it would. If the graphite there can get into it, I don't think it's going to be too much different. That's my uneducated opinion. So they got a 50-year mine life there, 50-year mine life there, 10-year mine life here. So once this is all proved, graphite shortfall comes in. I expect this company will probably go to 500 million, then on the way to $1 billion. It might not, could do nothing, but I've put money on it saying it will. So that's ITM. They've also got rare earths, which go into the motors of electric vehicles. So, not sure. They're rare earth projects around there as well. So I assume low CAPEX. They've got existing power there. South Australia is all on renewables. So yeah, they've got cheap power, existing infrastructure, not far from port, etc. Although 200 kilometers, that looks pretty far anyway. Well, these guys are only, yeah, you can see by this CAPEX, they're not going to be too much more out here. So moving along, that's ITM, pretty good one. Then we have Vault Resources. So it's actually come down quite a bit because they did have a working mine in Ukraine. It's been put on hold because the war, so they're not going to make any money out. So they pretty much wrote that off. And now they've just got a big project in Africa. So this is the one in Ukraine. They could basically spend, it's already existing, so they can spend a little bit of money. Graphite shortfall could make $100 million a year with little money spent. Though, just forget they own this because the war is on. Who knows what will happen in Ukraine. Apart from that, they own this one, which they've got years and years. Like, they'll spend, I think it's in this one, $200 million, and then they've got to make this many, 195 million EBITDA for 22 years. And then take in mind, graphite shortfall comes in, could be a lot more. Although who knows, there could be something else happen that you didn't suspect. So that's the risk you take. And then, so Vault Resources, I'm down quite hard on them. It turns out it did look good compared to all the competitors, but everything's come down now with rising interest rates. And because they lost the Ukraine one is the reason they came down as well. If Ukraine was up and going now, they'll definitely be 3 times the price. But yeah, that's what war does to a thing. Take in mind, it could turn around heavy if the war suddenly cleared up. So then there's this company, and always look at this for your market cap, not Google. It's not there, but anyway, they're roughly around. Let's just see how much. Let's see how much the difference between Google and thingy is. 1 second. Oh, they are 70 million. Okay, so basically, they need to raise $10 million. Bear with me 1 second. Oh, here we are. Quarterly report. Give me 1 moment. So they basically raised all the money, built the mine. They got 10 million. They're building the mine as we speak, and the guys building it doing it for free or withholding. They don't have to pay them yet until it's finished. So basically, $70 million you can buy them for. They need to raise 10 more million to build the mine, which they're gonna not raise through shares. They're gonna get a loan for it, apparently, not to dilute share price, and then they can make, I think about $60 million per year EBITDA, or 50 million, something like that, and then left with $25 million after paying tax, costs, and all that. So rough figures: buy the company for $70 million, spend another $10 million, then you make $50 million in EBITDA, pay your tax and everything, and then you get $25 million. That's if they can sell the graphite. Their graphite at the moment isn't going to the battery, it's going to the expandable graphite markets to get more for it. Though I see the battery grade stuff will increase in price in the future given demand. My uneducated opinion. So anyway, looks like a pretty good project. Already spilt. They don't have to raise any more money, diluting the share price, or just $10 million more. So yeah, that's them. So 70 million. They don't have as big as resource as Volt, though they already raised money. So that's comparing apples with apples. You have to see the ins and outs, and then see what you think is best. So there's heaps of other companies out there you can with graphite. Basically all of them could drill more and find more graphite around the thing. They all could do a smaller project at the start, so not raising as much money, and then as demand grows or they get more money, they can spend more to upgrade the project. But take in mind, you really want to build you want a project near existing things, because come that time when they want to raise the money, they're going to have to raise less money. You're going to get better reprice on shares. So take in mind, all these companies can lose all your money. Just know that. Do your own research. Don't listen to anything I say. Do your own research. And that's it from me. So, will Natural Graphite go like lithium and give you a 4x return? I don't know. Maybe it just goes up a little bit, less return. But if you invest in the right company, if this company drills it out, only has to raise 100 million to make $100 million a year, and the shortfall comes and they make $200 million a year, it's going to be worth a lot more than 35 million. Instead of buying a company like NAB, yeah, you get a 5% dividend, but guess what? Something happens, the share price goes down 30%, and yeah, that's what I think about some shares. And take in mind, the people running these companies don't care about the shareholders. Well, maybe they do a little bit, but Global Lithium, I think the directors got paid out for when they were raising. They got paid out just to get to 50 million tons. So basically, they were spending whatever they could to get to 50 million tons or something like that, and they got their big bonus. So guess where their interests were? Probably getting to that 50 million at all costs. Anyway, so hopefully no one's from GL1's listening. Yeah. So give me thoughts. Lots of other graphite companies. I think I've heard them all, but let me know. Pretty sure I've seen them all. I'll go this one here, FinFeed, like Rainy Nord. So this has got a list of graphite companies, sort of comparing them. It's sort of old as well. So there's a grade there. If you're in Canada, you normally have big CAPEX. Mason Graphite, their project, it's a $1.4 billion. It's going to make that back in 2 years, but they have to raise $1.4 billion. So these guys here, Renascore, only have to raise 100 million. These guys, 1.4 billion. So yes, Targa, good, pretty much growing company. I like to buy little companies under 50 million that will become the $500 million companies. Try to anyway. Also, you don't have to take a swing. You don't invest until you like something really good, and then you could still be wrong. So another thing, this Trident Minerals had this big mine. Look at all the tons. It got taken off them because they didn't renew the lease. It's going back and forth. So Volt Resources, in the ground, 20 million. That's a lot of tons there. Big mine life. So that's Volt Resources. What else can I say? Walkabout, I think they're on here as well. 4.5. All these companies can expand with more drilling. Grade is semi-important. You don't want to. I wouldn't want anything probably below 7%. Take in mind these 7% ones have high grade components throughout their projects. In some cases, yes. So my top picks: ITM. Why? Because it looks like they're not going to spend a lot of money to get it out of the ground, start the mine existing. They've got these big things. They've flown a magnet over them, and they've drilled them already, so it looks like it's going to be there. They're drilling now to confirm. The next 3 years are going to be dull. We don't need the graphite for probably another 5 years. and then who knows, something else might happen. But we don't need the graphite now, so that's why they're pretty low. Looks like they're going to drill this out, and then the demand will come. And yes, so who knows now? They might go up to 6 double in the meantime, and you miss out, or they could go down. You get a lower price. But I think from this price, they're going to be worth more in 5 years. Could be less. Who knows? So that's ITM. That's why I like them. Walkabout, because they've already built the mine. They don't have any more to spend. That's why I sort of like them. Sort of just seemed really cheap. And yes, that's them. Fault Resources. Yeah, at the current price, they're cutting down a lot in price. It's only 1 cent. So if that war turns around, this goes well, they're going to be very well. And then also, as the graphite demand comes, I'm sure they'll slowly get this into production. It's a big thing. Not to 50 kilometers, so sealed roads. Not sure if they have power there. Also, Walkabout Resources. They have power to site, grid power, which is like a lot of half renewables, half gas, something. But they got grid power, which is better than diesel power. Yeah, so Volt, Walkabout, and ITM, I like those. GM, ASX. You got this company worth $7 million. Oh, whoops, my bad. TSX, GM. $6 million. So they looks like they got 1 million tons in the ground. Will be more with more drilling. Look what happens when something happens in the graphite thing. Things go a bit crazy. So because they're so low, they could go well. Not really sure. I've got videos on them. They're on the TSX. So I'm going to end that video there. A lot of crap was said, but that's just what you get with the unedited videos. Hopefully, maybe you enjoyed it anyway. Thank you.